just blaze up the fire, blaze it till the morning, blaze up the fire, blaze it till the morning, blaze up the fire, blaze it till the morning, blaze up the fire.
Afternoon, everyone. Jesse Peretti coming to you from 9 Point Strategies. I'm here with Doug Banfelder, one of our senior producers, and we're here to talk about workman's comp. There's a lot of questions going on with workman's comp in the industry, and Doug's going to hopefully talk about some solutions for us that we can learn about. So, please.
Thank you, Jesse. So we have 2 A-rated carriers for work comp. And of course, there's always the state fund or the assigned risk pool, which has been previously was the only solution for us. And that's not the best place to be. It's the placement of last resort. But now with these 2 A-rated carriers, we can place all cannabis operations with an A-rated carrier at reasonable rates.
Excellent.
So, and that's progress for the industry. So of the 2 carriers, one is a major company everybody would be familiar with. We don't talk about who our carriers are because, of course, sometimes that changes too over time. But the point is, this major company has been writing work comp in the industry for the last several years.
Excellent.
That's good.
Track record.
But now there's one caveat with this. Because of some large losses they incurred with extraction operations, they will not write those any longer. That comes into a little bit of a problem with grows. Say you've just gotten your grow started, it's a year out, okay, year 2, you've got it fine-tuned, what do? You probably move into extraction operations. Why? Because the efficiency, the revenue stream, the consumer demand. So in that case, we'd have to move you away from this one carrier and place you with another carrier that we have, another really good company. The only caveat for that one is that it's the only way they'll do the business is they also want to write your payroll service.
Okay, so workman's comp with the payroll.
And the payroll, which a lot of people combine in any case. So the issue there is that they are agnostic on the extraction operations. They don't care. Their work comp rates are aggressive, which is nice to see, very competitive. It's just your payroll person probably doesn't mind giving up this administrative chore. It's not a big deal, but it's just the way that one has to be written.
Well, it sounds like you've come up with a solution for a gap or a problem in the industry, and yes, the challenge is the payrolls that go along with it, but if the payroll is really the only speed bump you've got to overcome to get over this much larger problem, I'm sure it'll make more sense, especially if the pricing is in point.
It is, and we're finding people like it as a solution, and it's not only a solution to work comp, not only a work comp solution, the second one is also a solution for people that collect a lot of cash, because this company will open an account in your name with a major bank, national bank, and you can make cash deposits for your payroll with that bank.
A banking solution. That is cool.
It's not an entire banking solution. It doesn't solve the whole puzzle, but it solves a big piece of it and takes care of your work comp.
Absolutely.
So we're really pleased to be able to offer that.
Excellent. One of the other things that I want to make sure we discuss, and I know it's a challenge when I've been talking to prospects, is I don't have employees, so why do I need workman's comp? And I really, truly believe that most people have employees, and they don't realize it when it comes to the regulation of any other small business. If they're working for you, and you're actually determining when they work versus when they don't work, they're not an independent contractor. No matter if they work part-time or seasonally from you, if you are determining exactly when they are, you are responsible for them, which means medical or loss of income if they were to get hurt working for you. And it's a major concern that people need to understand, and more importantly, as the industry moves forward and becomes more regulated, this is going to become a requirement. So businesses that build safe cultures and have them understand that they're going from an industry that this wasn't needed or regulated to now it is required, we want to help stabilize that and more importantly, create a good foundation for these businesses. So any suggestions on how we can approach that, Doug?
I appreciate you introducing this topic of really the 1099 employees, because in California especially, with the delivery service model being such a part of the culture, and so much consumer demand for delivery services. So much of that is quasi-outsourced to these 1099 employees. So you're right. If I am the business owner, I'm directing when they show up and what they do when they're there, they are my employee.
Exactly. They're
not a free agent. It's not like a contractor who tells you when they're going to come to your house and what they're going to do, and they may leave in the middle of the day. If you don't allow that, then they're not a 1099 employee. They need to be treated like a W-2 employee in terms of benefits. So, and we are going to see a lot of that in California with these delivery services. So we have that solution, and actually this will segue to as it often does, to another type of insurance, and that, of course, is commercial auto and hired and non-owned auto. And we can leave that for another time, but we'll talk about that.
I agree, and we have much more to talk about commercial auto and non-owned auto when it comes to delivery. Doug, I want to say thank you so much for your time, and lastly, what is your favorite four-letter word?
Weed?
Works for me. I'm Jesse Parenti, and this is 9 Point Strategies. Have a great day.
I think I'm gonna try something that I ain't never did before on this one. Let's go.
Get your lighters, roll it sticky, let's get